Hello, I'm Sami Zaidan. This is Counting the Cost on Al Jazeera, your look at the world of business and economics. This week, China bans Bitcoin mining and trading while El Salvador welcomes it. But will the cryptocurrency provide an economic bonanza or become a gangster's paradise? In the shadow of the Silicon Valley's tech giants and Wall Street's money, can Europe deliver more multi-billion-dollar companies? We talk to the CEO of one of Germany's rising stars. Can gas-guzzling supercars reinvent themselves for a greener future? We talk to the chief executive of one of the world's most desirable sports cars. As El Salvador became the first country to make Bitcoin legal tender, China was clamping down on trading and mining the cryptocurrency. That took huge chunks out of its price and valuation. Beijing says Bitcoin disrupts economic order and facilitates illegal asset transfers and money laundering. But China is also concerned it would undermine the rollout of its own digital currency. So why is El Salvador's 39-year-old baseball-wearing president Nayib Bukele pushing the use of the cryptocurrency? Well, here are three big reasons. El Salvador is a dollarized country. It doesn't have its own currency. Interest rates and monetary decisions by the U.S. Federal Reserve have a huge impact on El Salvador's economy. Well, what does that mean? Well, take the pandemic. Many governments have been able to print money to fund support for poor families. But a country without its own currency can't get its own central bank to buy its debts. It has to resort to international investors or the World Bank and IMF. Bitcoin enables it to diversify its reserves. Remittances make up almost a quarter of El Salvador's GDP. But traditional transfer companies charge fees, which means it's losing out on money. But what about the downsides? Why wouldn't you consider it for daily use, for example? Well, the huge fluctuations in the price of Bitcoin is one reason. If your currency can lose so much value in a day, people will lose confidence when they see the value of their savings evaporating. It's not easy to cash out of Bitcoin too. Although El Salvador is creating its own wallet and offering $30 to anyone who signs up to the app. Financial institutions will need to hold more cash just in case there's a run on banks because of the volatility of Bitcoin. Well, that means there's less cash in the economy to fund growth. There are many other concerns. Credit rating agency Fitch has said Bitcoin would increase regulatory risks. There's the potential for violations of anti-money laundering and terrorist financing standards. So how did this idea gain traction? Manuel Rapallo reports from the small Salvadoran beach town, where crypto has been part of daily life since 2019.
This is El Sonte, known locally as Bitcoin Beach. This small Salvadoran tourist town is home to a variety of small businesses, whose owners all have one thing in common: cryptocurrency.
Tourists who didn't bring cash would come and say they wanted to eat something, and they asked if they could pay in Bitcoin. I said to myself, this is a good strategy. I'm going to use Bitcoin and I'm going to start collecting. I downloaded the app and I started selling a lot more.
The success of the Bitcoin Beach project has boosted the popularity of cryptocurrency in El Salvador. The government announced Bitcoin would become legal tender.
Therefore, the law of Bitcoin is approved.
Supporters of the measure say the new law represents a vote of confidence in using blockchain technology to bring informal sector workers into a 21st century economy.
And the banks are not necessary. This is another important thing. There are many Salvadorans in this country that cannot use a bank because they have thousands of requirements.
El Salvador now becomes the first country in the world to formally legalize a digital currency. The initiative was led by El Salvador's president, Nayib Bukele. On Twitter, he called the passing of the Bitcoin law historic.
In the short term, this will generate jobs and help provide financial inclusion to thousands outside the formal economy. And in the medium and long term, we hope that this small decision can help us push humanity at least a tiny bit into the right direction.
There are also critics who warn of the risks of Bitcoin price fluctuations.
The moment
Bitcoin becomes a legal currency, problems appear, including in its most basic use, which is a form of exchange, and this is related to the volatility of the price of Bitcoin.
While some also warn that legalizing a decentralized digital currency could be wielded as a tool for corruption, Bitcoin believers in El Zonte and across El Salvador say the new law will only increase financial inclusion and has the potential to spur economic development.
Well, joining me now via Skype from London is Naeem Aslam. Naeem is the chief market analyst with AvaTrade. Good to have you with us. So, do you think the move towards Bitcoin is good for El Salvador, good for its economy?
Thanks for having me. Look, I think there are both pros and cons when it comes to this particular move, because if you look at the dollar inflow and the dollar export and the country's export, you can see that there isn't much of a reserve. And the country is a very unique country because it doesn't have its own currency. It relies on the dollar as in terms of its currency. So I think in terms of pros, that yes, we could see the economy growing, especially with the mining sector really kind of taking off. But at the same time, you also have to think and factor in the enormous amount of volatility. And right now, the government is saying that it is going to set up a fund of 150 million or in around that particular mark. So you would think so that, okay, given the volatility that we have seen around Bitcoin, how quickly can that really shrink? I mean, if you are thinking of providing a liquidity to bank with such a reserve, that can shrink pretty quickly, or at the same time, it can soar massively as well.
Well, if it turns to Bitcoin for remittances, might that threaten to dry up its pool of dollars?
Yes, exactly. So this is the main issue with respect to Bitcoin because of the higher volatility, as I was discussing. So, if we see another round of 2018 crash with respect to Bitcoin, we could easily see those liquidity pools which are being created by the country running into some serious sort of a trouble. And remember, the debt to GDP ratio is already running at 90%.
All right, and China at the same time, of course, is banning mining of Bitcoin. Could we end up seeing, do you think, those Chinese mining machines end up in El Salvador?
We could certainly see that because of the thermal energy, that green energy efficiency. And then, of course, we do have evidence of Chinese mining machines moving to or going to Texas as well. So, we are seeing that outflow from China in terms of mining to various parts of the world, but El Salvador with respect to its thermal energy, I think that is the major focus among the Bitcoin community. And if you look at the energy which is currently being used from fossil fuel and from the renewable sources, you could clearly see from, according to several different reports, that has gone and surpassed that 51% mark, meaning 51% of the energy which is being used is coming from renewable sources, not from the fossil fuel sources.
So what would that do then to a country like El Salvador when it comes to its energy consumption pattern?
I think obviously Bitcoin is a very a high energy consumption from day one in terms of its mining, but currently there isn't any strong evidence that the country could see or could face any of the blackout issues. So there's no very clear evidence in relation to that. So we don't really anticipate that can really happen to the country's economy, or country could face any sort of those trouble in the future.
We're talking about El Salvador, as the first country that makes this move. Can it be a model for other countries, though, especially when you keep in mind, I think 80% of Bitcoins have already been mined?
Yeah, look, that's a really intriguing question. And I'm going to go back to my opening statement because the country is in a very unique position because it has its own sovereignty, but it doesn't have its own currency. It relies on dollar. So I think that kind of very much answers the question that how many other countries can really adopt that.
Do you think it'll open up the economy there to money laundering and other issues?
I think that particular aspect has always been very much associated with Bitcoin from day one. But remember, dollar is the king when it really comes to money laundering issues or anything like that. I think we're given the fact that we have many regulators jumping into this space. We have an enormous amount of exchanges coming under the regulation umbrella. So that money laundering aspect isn't really the first concern for any investors, really.
And finally, Naeem, what do you make of the IMF's concerns about this move towards Bitcoin?
But look, IMF isn't really going to say that, look, that's a great move, let's go ahead, and then you start using your reserves in, moving away from dollar and then start using Bitcoin. Because if IMF gives the green light, and then that goes back to your earlier question, a lot of other countries would very much say that, okay, let's start doing that. But you know what? That reserve particular question, whether it comes to US corporates, whether it comes to countries, whether it comes to portfolios, institutions, hedge funds, family offices, that is coming now. And once again, there is a sufficient evidence right now, given where Bitcoin prices are now, a lot of that supply is being sucked up by the institutions and by some other sources. From major other players are really sucking up that supply. Why? Again, because of diversification. So if IMF, going back to the original one, IMF isn't really going to give the green lights from day one. Yeah, okay, go ahead and then do your reserves in Bitcoin. But I think investors are very much keen because of the intriguing element and the upside that Bitcoin really produces, or it has, and especially that it is being dubbed as a digital gold. So I think every single investor is looking from that particular lens.
All right, Naeem, it's been good talking to you. Thanks so much.
Pleasure.
Silicon Valley has long overshadowed Europe with its tech titans, but last year Europe registered its 208th $1 billion tech company. That's some achievement, but continental Europe continues to lag behind the UK for funding, and in some cases its cities are being pushed out of the top 10 funding rankings. According to Tech Nation, the UK is catching up to China on the tech investment front. Venture capital investments reached a record $15 billion in 2020. VC investment into London tech was more than Paris, Berlin and Stockholm combined at $10.6 billion in 2020. UK cities made up 20% of the top 20 European tech cities. Now, that could change with the UK's exit of the European Union, starting with investments like this. Berlin-based WeFox raised $650 million from investors in what it called a record-breaking round for a so-called Insurtech. So let's find out more about WeFox with its chief executive, Julian Teicke. Good to have you with us. So if you're looking usually for car insurance, home insurance, you'd go to a recognized insurance company, maybe a website, but you're actually now selling insurance through agents, right? I thought we'd done away with that. What's happening?
Well, it's quite the opposite, to be honest. Many people say insurance agents are dead. We say the opposite is true. Still today, 9 out of 10 insurance policies globally are sold by human agents. And instead of focusing on the 1 out of 10 policies and make it easier and better, what we say is the bigger potential is in digitizing the 9 out of 10 policies. And investors understand that this is the much bigger potential. I think our fundraising of $650 million just recently announced is a signal for this approach being a very good approach to disrupt insurance on a global dimension.
Interesting. Some of the biggest insurers, Munich Re, Allianz, they're German, right? Is that helpful when raising money to be part of a specialist hub?
There's a big tradition of European insurance companies making it global. And if we look at WeFox, we have started off in Germany. We are now in more European countries. Our ambitions essentially are global. There are the same stats also in the US. 9 out of 10 policies are sold via human agents. Also in Asia, 9 out of 10 policies are sold via human agents. We want to continue the tradition of European insurance company really shaping insurance on a global scale.
But generally speaking, European capitals have lagged behind when it comes to raising money from venture capitals, right? Why is that?
This time is over. So the last 20 years, the US and Asia were clearly in front of Europe. But what we see recently with amazing fundraising rounds from Germany, but also from Europe, the time is over. The capital is pouring into Europe. Europe is going to be the winner of the next 20 years. And with insurance, we have one of the biggest areas to disrupt. And we believe that the disruption globally will come from Europe. We are at the right point in time. We have the right talent. We have the right skills. And we now have the capital to really make an impact globally.
Do you think Britain's exit from the European Union might change any of that forecast?
Absolutely not. Britain, of course, has made a decision that slows down essentially the development in the UK. We, for example, for us, have the difficulty of not having the advantage of selling our insurance policies under a single European license now also to Britain. We will focus on further European countries in the EU first before going to Britain. Of course, Britain is an interesting market for us as well, but it makes things a lot more difficult. Capital is pouring into the EU, less so to Britain.
The UK has kind of temporarily lost its crown as the biggest share trading hub. Do you think momentum will suggest that the money will follow?
I do think that that's going to be the case. For us, we are well financed at this point. We really focus essentially on how can we disrupt insurance and take the customer experience that has made us successful in Europe globally. What we're going to invest our capital in is essentially further geographic expansion, A. B, we are going to offer not only P&C insurance, property casualty. We are today in motor, household, and liability insurance. We're also going to offer life insurance and health insurance and create a single policy, a single coverage for all of our customers. And the third piece, I think, is most important. It's really innovation of the core of insurance. So we're going to invest into turning insurance from what it is today, a pretty boring product, that we today made a little bit better by digitizing everything and making everything real time. But it's still insurance. It's still a boring product. And what we're turning insurance into essentially is a proactive product that is going to help you prevent bad things from happening. And this is possible through the rise of IoT data. And we want to be the
how can you do that? That's quite an ambitious target.
Absolutely. Our target is to prevent 30% of all risks happening from our customers. If you look at the history of insurance, you see the same development in commercial insurance. So in factories, for example, insurers have already taken a lot of preventive measures in the last decades. The same development now through the IoT data revolution. And by 2025, every human on Earth is going to own around 15 devices that are connected to the internet. This prevention will also come to personal lines insurance. So we have an AI team that's working on what we call WeFox Prevent, that works on increasing your awareness about your general, but also your immediate risk, so that you have an increased awareness about your risk situation and you reduce your risk. And this is a win-win situation. Insurance is going to become cheaper because of reduced risk. Customers are going to be happier. They're going to live longer. They're going to live healthier. And insurance is going to become more profitable. It's a win-win situation for customer and insurers. And we want to be spearheading that development with WeFox.
The only thing you left out there is we will all live happily ever after. Thank you for that positive outlook. Let's hope it comes true. Thanks so much for your time.
Thank you very much.
And finally, here's something we can all aspire to: supercars or hypercars. But these manufacturers recognize they need to change as the world moves towards reducing emissions. A little-known Croatian electric hypercar startup, Rimac, will take control of one of the world's most storied brands, Volkswagen's Bugatti. Rimac began life in a garage in 2009. It has grown to become one of the industry's leading technology providers. Its electric and battery systems can be found in Aston Martin and Jaguar cars. Its upcoming Rimac Navara is expected to be the fastest car ever built, a title previously held by the Bugatti Chiron. Well, my next guest is the chief executive of Lamborghini, which is owned, of course, by Volkswagen. Stephan Winkelmann joins us now from Sant'Agata Bolognese in Italy. Good to have you with us. So you're launching what's being described as the last Aventador. Is that an acknowledgement that the world is changing, that the future is for electric-powered cars?
First of all, we are celebrating our Aventador because it's the last of a kind. We will have 600 units only, 350 coupes and 250 roadster. And then there will be the phase of hybridization in 23 and 24 for the entire lineup of automobile Lamborghini. So first, the Aventador follower will be hybridized, will be a plug-in hybrid, but it will maintain our famous V12 engine. So there will be a new V12 engine also in the hybridized car. And that's the promise we are making to our customers, is that the new generation of cars is always to be better than the one before. And especially when we speak about performance, this is a must.
Will they still sound as good?
Yes, they will sound very good because they will keep our famous engine. As I said, with the V12, there will be this incredible sound and also the feeling of a real Lamborghini.
All right, so it sounds like you're saying, when you keep saying you're going to keep the V12, that there's going to continue then to be a niche market for the petrol purists like me, right? We're not a dying breed then?
No, because we are putting two things together. Because at the end of this hybridization phase, so when we launched also the Huracan at the end of 24, we will cut CO2 emissions by at least 50%. And this is quite something. And the new generations, they want performance on one hand side, but they also demand for sustainability. And I think that this is a good step, that we have, let's say, the two worlds match together, and we will have cars which are still fulfilling the dreams of their customers.
As you probably know, Elon Musk's Tesla is introducing more and more autonomous features. Is this something that hypercars, supercars are going to have to go down that road as well?
But there are three mega trends. Now there is electrification, there's digitalization, and then there's autonomous driving. The first two are already on our table, and they are very important for us in the future. If it comes to autonomous driving, if it helps in the traffic, if it helps for active and passive safety, yes, but we will always have a steering wheel, and we will have always features that you can shut off those helps, because it's important when you step into a Lamborghini. If you sit in a Lamborghini, you do it because you want to enjoy the drive. But there are situations where maybe this in the future is going to be boring in the traffic, so we will have a level of autonomy or of autonomous driving which is not influencing the joy and the fun of driving a car like this.
So how will Lamborghini evolve then, given what you said in the future? How will you retain some of your key ingredients, especially as restrictions, greener measures become tighter and tighter on car manufacturers?
As I said, the first step is now hybridization. We are going to have a first full electric vehicle in the second half of this decade. We think about 2027, which will be the fourth model of Lamborghini. We will continue to look into what is feasible with the combustion engines, to look if synthetic fuel can be an alternative after 2030. But the new lineup, which is going to be launched in 23 and 24, is going to fulfill the regulations until the end of this decade. And then, as I said, in the second part of this decade, we are launching our first full electric car.
And do you think your brand will be independent within the VW stable going forward?
But inside the Volkswagen Group, every brand has its own positioning, and the value of Lamborghini grows immensely in the last decade. And I think that the business is very good. We have an order bank of 10 months of production covered with customer orders. So also the outlook for this year and the beginning of next year is a very positive one. We are investing the highest amount ever invested into the future of this company. It's 1.5 billion euro until the end of 2024. And then we are looking into electrification. And I think that this is a good match for the Volkswagen Group, because we are covering pretty all the segments with the brands we have in the group.
I'm sure many young boys out there will be happy to hear that Lamborghini will be around in the coming greener decade too. Thanks very much, Stephan Winkelmann.
You're welcome. Thank you.
And that's our show for you this week. Well, there's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has entire episodes for you to catch up on. I'm Sami Zaidan from the Counting the Cost team here. Thanks for joining us. The news on Al Jazeera is next.